Something shifted in the XRP world that almost nobody saw coming. And the strange part? At first glance, it didn't even look like XRP news. It looked like another chaotic day in markets, another weird trading session, another flood of headlines people would scroll past without thinking twice. But underneath the surface, money was moving differently, quietly, aggressively. And if you've been in crypto long enough, you know that's usually how the biggest moves begin. Not with fireworks, not with mainstream media screaming at you, but with small signals, strange partnerships, institutional positioning, and powerful people suddenly appearing around an asset they ignored for years. That's exactly why the XRP market feels different right now. Because while retail traders are obsessing over candles and short-term price action, something much bigger is starting to form behind the scenes. And Elon Musk accidentally added fuel to that entire atmosphere. Not directly, not in the way people expected, but enough to wake the market up emotionally, enough to remind people how fast narratives can explode in crypto, enough to remind everyone that in this market, attention alone can create billions. And right now, XRP is quietly building one of the strongest attention setups it has had in a very long time. Because look at what's happening all at once. The market is stabilizing after several ugly red days. Institutional conversations are accelerating in Washington. Major crypto companies are suddenly sitting at the same table as regulators. Treasury-style XRP accumulation is becoming real. And now, billion-dollar infrastructure around XRP is beginning to emerge. That's not noise. That's ecosystem evolution. And most people still don't fully understand what that means. See, the average person thinks crypto moves because of hype. But the people who've survived multiple cycles understand something different. Narratives move first. Infrastructure moves second. Institutional capital moves third. And retail usually shows up at the end, when prices already look insane. That's the dangerous part. Because by the time everyone agrees something is real, the opportunity is usually gone. That's why moments like this matter. Not because XRP suddenly exploded overnight, but because the foundation underneath it is starting to look heavier, stronger, more institutional, and frankly, more difficult to ignore, even during uncertainty, especially during uncertainty. And that's what makes this current environment so psychologically interesting. Because despite government shutdown fears, despite ETF delays, despite macro pressure, despite constant crypto volatility, XRP keeps finding its way back into the conversation again and again and again. That's not random. Assets don't survive years of attacks, lawsuits, skepticism, and market cycles unless there's something underneath them that keeps pulling capital back in. People forget how unusual XRP's endurance actually is. Most crypto projects disappear emotionally long before they disappear financially. The attention dies, the belief fades, communities fracture, liquidity dries up. But XRP? Even after years of chaos, it still commands one of the most emotionally committed communities in the entire crypto market. And institutions are starting to notice that resilience. Because institutions don't just buy assets, they buy ecosystems. They buy narratives. They buy communities. They buy future positioning. And now, suddenly, you're seeing XRP evolve from a speculative retail asset into something much larger. A potential institutional structure, a potential treasury asset, a potential liquidity layer. And if that transition truly happens, the psychology around XRP changes forever. That's why the recent announcements hit differently, because this wasn't just another random partnership headline. This wasn't just another bullish tweet. This was infrastructure, real infrastructure, the kind institutions actually care about, the kind that creates long-term gravity around an asset. And once gravity forms in financial markets, everything changes. Suddenly, the conversations become more serious. The capital becomes stickier. The volatility becomes opportunity instead of fear. And the perception of the asset begins evolving from speculation into legitimacy. That's where XRP may be heading now, especially after the launch of Evernorth XRP. And honestly, this is where things start getting very interesting. Because most retail investors completely underestimate what institutional vehicles actually signal. When firms begin creating large-scale financial structures around an asset, they're not thinking about next week. They're thinking years ahead. They're thinking about positioning before broader adoption arrives. They're thinking about controlling liquidity before demand scales. They're thinking about becoming early gatekeepers to a future market. That's why this move matters so much more than people realize. Evernorth isn't just launching another crypto product. They're attempting to build institutional rails around XRP itself. That's a completely different game. And look at who's involved. Ripple leadership, major crypto investors, industry veterans, people deeply connected to the infrastructure side of crypto. That level of alignment doesn't happen accidentally, especially not in this market, because institutions are extremely selective right now. Capital is tighter, Risk management is stricter. And after years of regulatory chaos, large players are far more careful about where they place long-term bets. Yet despite all of that, XRP keeps attracting serious infrastructure development. That should make people pause for a second. Because whether someone personally loves XRP or hates it almost becomes irrelevant at that point. The real question becomes, why are sophisticated players continuing to build around it? That's the question smart investors ask. Not emotional tribalism, not social media wars, not influencer nonsense, just incentives. Because money usually tells the truth long before headlines do. And right now, the money around XRP is becoming harder to ignore, especially with the treasury narrative beginning to emerge. Now, this is where psychology starts becoming extremely powerful, because Bitcoin already normalized the idea of companies holding crypto on balance sheets. Then Ethereum began entering that conversation. Now, XRP is trying to enter that institutional treasury phase too. And if that trend accelerates, the perception shift could be massive. Because once corporations begin holding an asset strategically, supply dynamics start changing. Liquidity starts tightening. Long-term holding behavior increases. Speculative narratives evolve into strategic narratives. And suddenly, price action alone stops telling the full story. That's how assets mature, slowly, then suddenly. And you can feel the market beginning to recognize that possibility. Not fully, but enough. Enough for curiosity to start building again. Enough for investors to start paying attention again. Enough for institutions to quietly prepare. That's why this current moment feels psychologically dangerous in the best possible way. Because the market still hasn't fully decided what XRP is going to become. And uncertainty creates opportunity, always. People think certainty creates wealth. Usually it's the opposite. By the time certainty arrives, the asymmetric upside is mostly gone. That's why early positioning always feels uncomfortable. Messy headlines, confusing signals, mixed sentiment, fear everywhere. But beneath that confusion, infrastructure quietly gets built. And that's exactly what's happening now. While most people are distracted by short-term volatility, the XRP ecosystem is slowly becoming more institutionalized. And then suddenly, Elon Musk enters the emotional atmosphere again. Not necessarily because of XRP directly, but because Elon understands something almost nobody else understands better than him. Attention is financial power. Narratives are financial power. Emotion moves markets faster than logic ever will. That's why even a random Elon-related event can ignite speculative energy across crypto. Because people associate Elon with disruption, chaos, momentum, unexpected explosions. And in markets, psychology matters more than people admit. One tweet, one joke, one meme, one strange corporate move. Sometimes that's all it takes to completely shift momentum. That's why crypto remains one of the most emotionally reactive markets on Earth. And Elon knows it. The man practically weaponized internet attention into financial influence. So when unusual Elon activity starts circulating during a period where XRP narratives are already heating up, retail psychology starts connecting dots instantly, even when those dots aren't fully connected yet. That's how speculative momentum forms. Emotion first, logic second. And honestly, that's what makes this current environment so fascinating. Because underneath all the noise, there's a deeper feeling building in the market right now. A feeling that something larger may be forming beneath the surface. Not just for XRP, but for crypto's next institutional phase entirely. There's a reason the smartest money in the world rarely chases headlines. By the time headlines become obvious, positioning is already happening behind closed doors. And right now, that's exactly what makes the XRP situation feel so different from previous cycles. Because this no longer feels like pure speculation. It feels like preparation. Preparation for a financial environment that most retail investors still can't fully see yet. And the scary part? The market often rewards the people who understand the transition phase before the transition becomes mainstream. That's where fortunes are usually made, not when CNBC starts screaming about crypto every hour, not when your cousin suddenly asks if it's too late to buy XRP, and definitely not when institutions publicly admit what they're doing. No, the real money gets made during the awkward phase, the phase where uncertainty still dominates headlines, the phase where people are confused, the phase where the infrastructure quietly grows while sentiment stays divided. That's exactly where we are now. Because if you zoom out for a second, look at the sequence forming around XRP. Ripple keeps increasing its institutional visibility. Regulatory conversations are becoming more normalized. Large financial structures are being built around XRP liquidity. Treasury-style accumulation narratives are beginning to emerge. And now, institutional-grade vehicles tied to XRP are starting to appear publicly. That's not random momentum. That's ecosystem layering. And ecosystem layering is what separates temporary hype coins from long-term financial networks. Most crypto projects only know how to market themselves. Very few know how to build durable financial gravity. That's why so many projects disappear after every cycle. They were built for speculation, not integration, not institutional usage, not long-term capital flow. But XRP has always aimed at a much larger target: cross-border liquidity, institutional finance, settlement infrastructure, global transaction systems. And whether people personally believe in that vision or not, the important thing is this: large players are behaving as if that possibility matters. That changes everything psychologically, because markets are future pricing machines. They don't wait for full certainty, they front-run probability. That's why even partial institutional movement around XRP becomes incredibly important, especially when combined with broader macro instability. And honestly, macro instability might be the hidden catalyst most people are ignoring right now, because the current financial environment feels fragile. Governments are stressed, debt levels are exploding, currency confidence keeps getting questioned globally. Central banks are trapped between inflation pressure and economic slowdown fears. Markets are addicted to liquidity, and investors everywhere are desperately searching for the next major asymmetric opportunity. That's the environment where alternative financial systems suddenly become very attractive. Not because people wake up one day and magically love crypto, but because traditional systems begin losing emotional trust. That's how transitions happen historically. Slow erosion first, then rapid behavioral shifts later. And crypto sits right in the middle of that tension, especially assets connected to liquidity infrastructure, which is exactly why XRP never fully disappeared from institutional conversations. Even during lawsuits, even during regulatory chaos, even during brutal market conditions, the narrative always survived. And now it feels like that narrative is evolving again, because suddenly the conversation is no longer just, will XRP survive? Now the conversation is becoming, what happens if institutions actually start integrating around it? That's a completely different psychological framework, and when frameworks shift in markets, valuations can change violently, because people stop pricing the present. They start pricing the future. That's why these treasury narratives matter so much. Most people hear treasury company and don't fully grasp the implications. But think about what treasury accumulation actually does. It removes liquid supply. It strengthens long-term holding behavior. It creates strategic exposure instead of emotional trading. And most importantly, it signals confidence, public confidence, institutional confidence, strategic confidence. That kind of signaling changes market psychology dramatically, because humans are social investors. People look for validation from powerful entities. That's why institutional adoption narratives are so explosive emotionally. Not because institutions are always right, but because institutional participation reduces perceived risk in the minds of average investors. That perception alone can create massive momentum. And now XRP is entering that psychological territory again. But this time, the setup feels heavier, more mature, more connected, more integrated with broader financial infrastructure conversations. And that's happening while most retail investors are still emotionally exhausted from years of volatility, which ironically creates opportunity, because exhausted markets often produce the biggest future moves. People forget that major bull cycles usually begin when sentiment still feels skeptical, not euphoric. Right now, most people still don't trust the market. They still expect disappointment. They still assume every rally will collapse. That emotional hesitation creates room for upside surprises, and XRP thrives in environments where expectations are low. That's been the pattern repeatedly. Every time people emotionally write it off, the asset somehow forces itself back into the conversation. And now it's happening again through institutional pathways instead of just retail speculation. That's the part people are underestimating, because infrastructure stories are slower than meme stories, but they're often much more powerful over time. Memes create spikes. Infrastructure creates foundations, and foundations are what institutions actually care about. That's why the Evernorth development matters psychologically far beyond the headline itself. It's not just about one company. It's about what the existence of that company signals. It signals belief that XRP's ecosystem is mature enough to build around. That's huge, because institutions don't build billion-dollar structures around assets they think are disappearing. They build around assets they believe could become systemically important later. And that belief alone starts attracting additional capital, additional partnerships, additional infrastructure. That's how network effects begin accelerating, slowly at first, then all at once. And meanwhile, retail investors are still focused on daily price candles. That's the irony of markets. People obsess over short-term noise while long-term positioning quietly changes underneath them. That's why patience becomes such a psychological advantage in investing. Most people physically cannot tolerate uncertainty long enough to benefit from asymmetric opportunities. They need instant validation, instant movement, instant emotional payoff. But institutional positioning rarely works that way. Real accumulation usually feels boring before it feels obvious. And honestly, XRP's current phase feels a lot like that. Quiet accumulation energy, infrastructure energy, narrative transition energy, the kind of environment where future stories are born before prices fully react. And then Elon Musk enters the emotional equation again, which only amplifies the speculative atmosphere even further. Because whether people love him or hate him, Elon represents one thing better than almost anyone alive: narrative volatility. The man can move billions in market value with a meme. That sounds ridiculous, but it's true. And that truth reveals something profound about modern financial markets. Markets today are emotional systems, attention systems, narrative systems, especially crypto. That's why Elon-related events still create shockwaves across digital assets. People understand that if Elon ever seriously aligns himself with a narrative, momentum can become explosive almost instantly. Now, to be clear, this current XRP situation isn't about Elon officially endorsing XRP. That's not what's happening. What's happening is more subtle. The market is emotionally connecting broader crypto momentum, Elon-driven attention energy, and XRP's institutional developments all at the same time. That combination creates psychological acceleration. And psychology is everything during transitional phases. Because investors aren't just buying assets, they're buying future stories, future relevance, future influence, future adoption. That's what makes crypto so emotional compared to traditional markets. People aren't just trading fundamentals, they're trading belief systems. And right now, belief around XRP is quietly rebuilding again. Not through hype alone, but through infrastructure, through institutional alignment, through strategic positioning. And that combination can become extremely powerful if momentum continues building, especially if broader crypto sentiment turns risk on again. Because once liquidity floods back aggressively into crypto markets, capital starts hunting for narratives with institutional credibility. That's where XRP becomes dangerous. Because unlike many speculative projects, XRP already has brand recognition, global awareness, a deeply committed community, years of survival, and now increasingly, institutional infrastructure. That combination is rare, very rare, and markets tend to reprice rare assets aggressively once sentiment shifts hard enough. That's why this current moment feels so important emotionally. Not because guarantees exist. Nothing is guaranteed in crypto. But because the probability landscape around XRP feels like it's evolving, quietly, strategically, and faster than most people realize.